Afternoon, everybody. This is Chrissy from Solstice ATR. Hope everybody's enjoying Valentine's Day and all the love is out there. So basically, I wanted to start with our investors about to repeat the mistakes of prior generations. What basically I'm looking at is from the 1980s all the way up to 2021. Looking at the data psychologically, basically in the market, and the concepts looking at the different moving averages at the 50 and 200 where most individual broker dealers and investors look at. But in reality, we don't have to be biased to either side related to all time frames on the short and the long term, because the long term and short term, we can have retracements in between or side market for a while before we break out or break out a consolidation like what happened last week from Monday through Friday, and Friday we broke out a consolidation. The only thing you learn from history is as a trader, you're looking at the charts historically, but you have to understand in relationship and you're thinking what are the long-term, mid-term good habits and bad habits are. And here by accident, I supposed to say do good habits and not the bad habits. By accidentally, I wrote it there, typo. For illustration use only, we are not a broker dealer. Past performance doesn't indicate future results and use at your own risk. And from here, let's go to the next chart. Charts are easy to understand when the market is low because basically people look at the left side of the chart to see where the market is in relationship to consolidation and breakout. And what I did, I kind of used a couple of different instruments and I connected the highs and lows of them. Usually you consolidate, then you come out of consolidation once you break out of the double top or symmetrical triangle, you break to the upside, or you're coming back down, you break out of the symmetrical triangle or the channel to the downside. So I want you to remember, trade what's given to you on the chart, not what you think, because if you are biased to one side, you're going to get caught. The stock market cannot go up every day. In reality, since February 19th through March 23rd, the market has turned around due to the stimulus package globally, domestically after the pandemic of 2020. The market has been going up and everybody's looking at their statement or looking at their account. Every day it's going higher and higher and higher without understanding the risk involved coming back down. Sometimes the market is normal to come back inside of a larger trend. All trends have normal counter-trend moves. That is true. It is not possible for our account balance to hit a new high every day. For example, a couple of days you'll have, side action and you may retrace a little bit to continue higher. So sometimes your statement or your daily trading account is not going to reflect every day a higher return, because if you keep going up with that retracement, you end up basically on one side and eventually holding a bag once the market turns around. So you have to take the risk of the apex when you reach a higher area to come back in a little bit more. So I'm going to cover some of the futures, equities, Bitcoin currencies. You can check us out at Solstice ATR. Ask us how you can join Discord for 1 week for free. This is my Discord ID. Subscribe to YouTube. It's free weekly video. The videos I put out on weekly basis is basically telling you, hey, that's what I think what the market's going to do in the following week, but I cannot predict what the market can do every week. All I can do is trade what's given to me in front of me. Since I've been trading, since 2005, but I was, before started in 1996, 97. So that's a long time, I have behind my belt. So let's go to the next one. Before I do, I will come back to this one and I'll tell you a little bit more about it. Let's just go back in here in history. What I've done, because I had to take out the small cap out of here, this goes back as far as 1987, 1988, as you can see on the chart, then continue through 1991, through 1997, the reset in 2000, 2001, then the reset in 2008, 2007, coming back till 2009, then the reset in 2013 to continue higher. So what I want to do is start around the 1987 through 1995. Okay, we're going to grab this area here by itself and zoom in this area till 1995 to show you the resets in the chart. As we can see in 1987, when the market reset, we fell back down in 1987 till 1988. Then we continued till 1990 to basically get a breakout out of this area. Then we fell back halfway in 1990 through 91. Then we continued to quiet for a while to the upside. So if I go to the right side a little bit more, and we come to the area of 1997. Okay, we'll zoom in correctly, no problem. Here's the okay, there's the 1997 through 98 through 2001, 2000. Then we had the reset back till 2003, and you can see we retraced 100% of that move back down, and we continued higher till 2008. And in 2008, 2009, we had the similar situation. This is the 2008 before the reset. We fell down here. We retraced 100% of it, and we fell a second time, third time I should say. We'll zoom in from here to show the reset till 2013 before we continued higher in this area. You can see that the 2000, 2001, 2003, come back till 2008, 2007, 2009, then till 2003, I mean 2013, then we continued higher. This is why I'm showing you these reversals, because I don't want you to get caught on the wrong side. And as you can see, from 2008 till this area here, till the 2016, before the election, the Eurozone and the Brexit exit, we finally broke out in 2013 to continue higher, reset 1/3 of the move on a combination of those instruments. Then we moved quite a bit higher. Then we had the 2020 pandemic. We fell back down. This is the China tariff and whatever was going on in here. We had a small reset. We continued higher. Since the Federal Reserve Board been printing money, we reversed very sharply to continue higher without looking back at the market. So what I want everybody to understand, we're going to trade what's given to us, not what we think. And since 2017, as you can see, that reset that we came back down to and reversed back up because of the the money machine printing more money. And I just have the S&P, the Nasdaq, and the Dow. The Nasdaq represent 100 companies, the S&P represent 500 companies, and the Dow represent 30 in the US. So if I take all these out and I want to look at the overall New York Stock Exchange, which is the NYA, as you can see, since the where is it? Okay, there it is. Since the New York Composite Index, that represent a more range of the overall markets in the US. This is a 3-year chart. As we can see in the chart here, we'll just zoom in down here, just to this area. I don't want to go too far out. So since 2016, we went up till 2018, retraced halfway, continued higher, tried to break out. Then this is the pandemic when we fell back down. This is the double bottom on from 2016. We reversed and broke out. We have this major gap here in the profile and in the charts. Since then, we 100% retraced from this area, that triple top on the breakout. And this is very important. If things do change in the overall market, I want you to be open-minded to change. I mean, we can continue higher and still break out higher, and we can keep going up. But I want you to understand on the weekly, monthly chart, Fibonacci's, you have to be open-minded to change. And this is the annual low for the year in March 23rd till December 20, I think 29. That was the 12th, 14, 2020. That was the high. And we reset a little bit, then we continued higher in January. So if I go out 3-month out time, instead of daily, we go intraday. We go here 90 days, and we go 4 hours. So in the last month or so, this was the January high till the top, and we fell back in. Our 50% fib is right here, and I'm now starting to anchor to show you, hey, this is the monthly. The monthly I use purple. The annual high is right here, which was in on the 12th. This is the breakout in January. We pushed up, came back in, and this is the February push higher. We are on the 23% extension fib. Do we continue to the 38.50? Possible, but keep an eye on the monthly fib because this was the 4-day consolidation before we broke out on Friday. Is there going to be continuation? Possible. If there is not continuation, I want you to be to open mind if we lose this area, which is the 15,240 or 15,200, in order to come back, because we are far away from the 50 simple moving average, the 116, 200 SMA, and the 225. So remember, trade what's given to you. Let's take a look at BTC. I'm doing it a little differently today. And what I wanted to show you, this is the annual high for the year. We've got the 38%, the 23, the 50, and the 61 extension. We have not hit, we've touched the 78. We have not the 100%, from 0 to 100. We have, the other extension, which is 200. Then you have the 161 on the top. Since we are extended, we did a rounded bottom. We created this cup and handle on the right side on BTC. This is very important for me. This area is very important. Pay attention to the 61.8 and as well the 23%, the monthly fib extension. If I end up losing, if I want to be very tight on this area, so I'm going to zoom in. This is the gap in the profile. I'm leaving because these are the overnight areas, which is the shadow, the gray. These are the trading hours in U.S. markets. So this is the shadow that we have a professional gap on that higher push, because everybody, trying to chase now Bitcoin. I want you to be worried about that 61%, 38, and the 23. These are the three numbers. The 45,995. The 45,453 and the 45,224. If this is area, if you are long from way down there at 8,000 or 15,000 or 25,000 or 30,000, protect the capital that you made in Bitcoin, because if you end up losing this area, the Apex can do the same thing as they did when they put Bitcoin on the exchange and it had that 20,000 spike, then the dump. So remember, trade what's given to you. Don't be biased. I'm not trying to scare you away from Bitcoin. Try not to be a bag holder. Trail your longs because you are in that small channel in the last 4 days. You had side actions for 4 days. Visa, MasterCard was added. Elon Musk is tweeting. Gene Simmons. I'm not going to go down that route on Twitter and other, Reddits and all other places that are people talking about, the hype of Bitcoin. I'm just trying to teach you how to trade the weekly fibs, the channel breakout, breakdowns, and have a target in place for your areas. So that's Bitcoin. Let's take a look at CL. CL is in a similar situation. As we can see, CL eventually broke out. This is that was the $40. We had a lot of area we couldn't get to. Then we consolidated around the 15. Eventually, this is last month Feb. We extended to the 61. There's a 161. We hit the 78.2. We are almost at the 100%. If you take this extension from here to here, that 0 Feb, and you duplicate it to the top, these are extension for the 200%. So what I want to do now, we know the monthly Fib where it is. So if we zoom to the right side and we look at the weekly fib, this is the Sunday afternoon when the market opens up, US markets and China, to trade for the following week. And we look at till Friday afternoon where the close is. This is our weekly fib. The 38.2, 50, and 61 are very important on crude to hold. Let's say it's between the 58.80 and the 58.20. If we end up losing this area, you look for the other side. If we continue, that's great. That's your 50 simple moving average. That's your weekly low. That's your 89 EMA. And that's your 116 simple moving average, and that's a 61.8 if I measure the 2-week range in the Fibonacci's, okay? So that's crude. Let's take a look at RTY is similar situation. I have the fib. This is the monthly fib high. This is the weekly fib high and low from Sunday, Monday low till Thursday high. We are in consolidation. The Russell is, looks like it's in a range bound. If the Russell continues and breaks the prior weekly high, this will continue higher. And if we fall through the weekly low, look for the backside of the 50, the 38.2, 50 fib and the 61.8. If we continue higher, then we look for the extensions to the upside, and I'll show you how they look like. There's the upside Fibonacci's, and we do have the 161 at the top as well. So you can see that's my annual Fibonacci um, fib, which is the 23. This is the 38 extension to the top, which is 138. I usually have them numbered backwards because I draw my fibs from low to high, so I can get the extensions to the upside. That's the RTY. Let's take a look at the Dow YM. Dow Joe Industrial averages in a similar situation. We can see that it was consolidation for a while. This is the monthly fib from January till January's high. We have the retracement. Then we continued in February back up. We have this gap here. This is the weekly fib from Friday. So either side, if we break up in the Dow and we continue, this is the annual high for the year in 2021. If we break out, we continue higher, and if we fall through this wedge, you look for the 38, 50, 61 to hold. If not, you look for the backside of the 50, 89, and the 116 SMA and the 200. Let's take a look at the NASDAQ. Remember, the NASDAQ consists of the healthcare sector, so I don't want you to be influenced by any of what people are tweeting or what's going on in the market. This is the annual fib for the year. We'll zoom in from here. We know the high is at the 12,900 area, and if we continue high, this is the monthly fib for January. That's the high. This is a very important area that we do hold this area, that triple top 1, 2, 3, and the breakout. We retested it this week to continue higher in the NASDAQ. You can see that reversal on Wednesday. We came back to this low, and this is a very important area, the 13,600 or the 13,500 to hold in the NASDAQ to continue higher. If we reverse, we go the other way, and if we break out, you look for the extensions to the upside. That's your 50 SMA, 89, 116, 200 SMA. Let's take a look at the ES. ES is range bound all week, and I said keep an eye, and I usually tweet on Twitter in the morning pre-market to show, hey, these are my low targets, these are my high targets. You can follow me on Twitter, but I do not, talk about it that much. I just put a tweet. Here's my high, here's my low for the overnight. Here's the range. That's what I expect the target to be to the upside. That's what I expect the target to be to the downside. And usually those targets are usually good if there's momentum in the market to retrace to those levels. I can give you an example of the 38.78 quarter. I had 38.79 for Wednesday, and on Friday I had 39.37 as my target to the upside on Friday for the ES. So we were range bound, and I was expecting a breakout out of this triangle. If you look at this range in here, we can see that we consolidated for 5 days. These are the overnights here. We broke up, consolidated on Tuesday for the same area. Basically, we closed almost identical. We looked up, we came back down, we closed a little bit underneath the Monday and Tuesday closed. And on Thursday overnight, we pushed up, we came back, and we closed inside that range. Then on Friday, we were inside. Then eventually we looked up, we continued. We consolidated for a while. In the last 30-minute, 40-minute of the trade, we started spiking up. We hit the 35.75 high for the day on ES. So remember, I want you to trade what you see, not what you think. And I will show you on Twitter how my handle is. It's at Chrissy Farah. As you can see and I'll open this one up so you can see I didn't log in. You can see that was at 6:14 a.m. February 12, 2021 on Twitter. pre-market, which is 9:30 East Coast, I said, well, the S&P 500, the overnight range is this high, and the midpoint is here, and the low for the day. Up target 39, 37. 4 days range for breakout need to resolve for direction, and I put the low target 38.67 quarter. Where did we go to? 35.75, 36 quarter. Close enough to give you the range. And if I go a couple of days back in the profile, let's just go back to 4 days back. Where am I? February 10. February 10. Wednesday. It should be here. Okay, there it is. This is February 10th, which was Wednesday. The futures in the S&P 500 had a classic liquidation break in the morning to the low target 38.79. Let's go back. This is the time when the market closed. You can see at 350. Let's take a look at it in the morning. This is the pre-market target ES overnight range, midpoint high and low, ATR target low, ATR target to the upside, and I mentioned the low target 38.79.50. We hit 38.78 quarter, so it's close enough. Usually helpful, at least gives you an idea of where the ranges are in futures to trade those directions. It doesn't matter whether you trade in equity such as Apple, Amazon, Tesla, Netflix, Google, Costco, Walmart, Target, Microsoft, Boeing, Lockheed Martin. It doesn't matter. Nike, Visa, MasterCard, Shopify, Valero, ExxonMobil, Chevron. So remember, trade the charts in front of you. I'm just trying to give you examples how the AI works, which is the adaptive algorithm in the charting. So once again, you can follow me at Chrissy Farah on Twitter. It's free. So this is the ES. So I don't want to keep it too long. So I want to make 2-3 stocks, and we'll go from there. I'll do Google. And Google was basically range bound. We have to keep an eye on Google to see if it's going to come out of this weekly fib or the channel that it's been side action, because Monday was a down day, Tuesday was almost identical, Wednesday was almost identical, Thursday was almost identical. Then on Friday was a little bit of a breakout. In order to continue higher, we have to keep an eye on the 2100 if it can clear it to continue higher, and if it falls through the 2075 area, be careful of it, because it can retrace back to the other side. So trade what's given to you. And I'll do one more, Tesla. So this is Tesla. As you can see, Tesla, since that monthly fib extension up, we came back in and we've been range bound, continuing lower, and Tesla tried to come out of that linear regression channel or a wedge to the upside. Keep an eye on the 18 and the 50 simple movement, which is the 50 fib and the 61A. If this will act as resistance or cannot clear the 38, then it continues lower. So we're going to trade what we see on the charts, not what we think. And last but not least, I'm going to go back to this. This shows basically the NASDAQ Technology Index, looking at the basically on where the scenarios happened in the market, prior history. Remember, we can look back at the mirror, but we cannot try to predict the future. All we can do is look at the future, look what the outcomes has been before historically, and be able to understand that psychologically, mentally, we have to be train ourselves, because the market can be irrational sometimes, but you have to be open mind to change in the trend and trade the direction that you see. Protect your capital. So this is the 1990 through 1991, the spike. Then the market did very well till 2000, 2001. We had the dump, then we continued to 2003. You had the 2007, 2008 dump, then we continued till 2009, and we never seen that ever again. Then it happened in 2020, and now we are in 2021. There may be good things to happen in the future, but remember, there may be a change in the trend. Once again, you can check us out on Solstice ATR, or you can DM me on Discord if you'd like to join our group for 1 week for free. Enjoy your Valentine's. Take care, and I'll see you guys on Tuesday.